Bankruptcy can feel like the end of your financial journey, but it's actually a chance to rebuild stronger. In this video, we'll walk you through the key steps to recover your credit score, from smart budgeting to using credit wisely. If you're ready to take control and create a fresh financial start, stay tuned. Before we begin, don't forget to like and subscribe for more personal finance tips and credit building advice. 10. Check your credit report regularly. After bankruptcy, it is important to review your credit report for mistakes and outdated information now. You are allowed to get a free copy each year from the main credit bureaus to review your credit file. Checking regularly helps you see your progress and spot errors that could harm your credit recovery. Look for accounts listed incorrectly or debts that should show as discharged after your bankruptcy case. Dispute any mistakes by sending a letter to the credit bureau with proof to have them corrected soon. Accurate credit reports give lenders a clear view of your current financial standing and history today. When your report is clean, it becomes easier to rebuild your credit score step by step over time. A correct report is the foundation for rebuilding trust with banks and other financial institutions again. Make this a habit, and you will stay in control of your credit repair and recovery process fully. 9. Create a budget you can maintain. Bankruptcy teaches the value of living within your means to avoid repeating financial mistakes of the past. A budget helps you plan your income and expenses so you always know where your money is going. List your monthly income and all expenses to see how much you can save or use for debt payment. Keep some money aside for emergencies so you not rely on credit cards for unexpected expenses. A realistic budget keeps you from overspending and helps you pay bills on time every single month. When you live within your means, your credit score improves steadily without taking risky financial steps. Tracking your spending makes it easier to identify areas where you can cut back and save more. Over time, your budget becomes a tool for stability and financial growth after your bankruptcy case. The discipline of following a budget will help you regain control and rebuild your credit successfully. 8. Pay all bills on time. Your payment history is one of the biggest factors in your credit score after a bankruptcy discharge. Paying on time every month shows lenders you can handle credit responsibly even after financial trouble. Set reminders or use automatic payments to avoid late fees and negative marks on your credit record. On-time payments build trust with creditors and slowly improve your score over the following months. Even small bills like utilities or phone services can affect your score if they go unpaid and late. Late payments can hurt your score quickly, so staying current is very important in credit rebuilding. If you cannot pay the full balance, at least pay the minimum amount due to stay in good standing. Consistent, timely payments prove you are a reliable borrower ready for better credit opportunities later. This habit will strengthen your financial reputation and speed up your credit recovery process completely. 7. Apply for a secured credit card. A secured credit card requires a cash deposit that acts as your credit limit for using the card. It is easier to get after bankruptcy since the bank has security from your upfront deposit payment. Use the card for small purchases only and pay the balance in full every month without delay. This activity will be reported to credit bureaus and help improve your score if used responsibly. Choose a card with low fees and a clear policy for upgrading to unsecured credit after good use. Secured cards are powerful tools for proving your ability to manage credit after past financial issues. 6. Keep credit utilization low. Credit utilization is the amount of credit you use compared to your total credit limit on accounts. Aim to use less than 30% of your available limit to keep your score improving steadily. High utilization can lower your score even if you pay your bills on time every single month. Pay down balances as much as possible and avoid carrying large amounts of debt for long periods. You can make multiple small payments during the month to keep your utilization rate lower overall. Lenders view low utilization as a sign you are managing credit wisely and avoiding financial strain. 5. Avoid applying for too much credit. Each new credit application creates a hard inquiry, which can lower your score for a short time. After bankruptcy, it is best to apply for credit only when you truly need it for your situation. Too many applications in a short period can make lenders think you are desperate for credit today. This can lead to more rejections and make rebuilding your credit score take much longer to happen. Focus on building a solid history with 1 or 2 accounts before seeking additional new credit lines. When you apply carefully, you protect your score and improve your chances of getting approved later. 4. Consider a credit builder loan. Credit builder loans are designed to help people improve their credit history through regular payments. The bank holds the loan amount in an account, and you make monthly payments toward that balance. When the loan is fully paid, you get the money and a positive payment history on your record. These loans are easier to get after bankruptcy, since the bank already holds the loan funds safely. Making all payments on time will boost your score and show responsibility to potential future lenders. They are often offered by credit unions or community banks with fair terms and low interest rates. 3. Become an authorized user. Ask a trusted family member or friend to add you as an authorized user on their credit card. You will benefit from their positive payment history if the issuer reports authorized user accounts. This method can help raise your score without needing to qualify for your own large credit line. Make sure the primary user manages the account responsibly to avoid harming your score later. You do not need to use the card yourself to gain the credit score benefits from this method. This is a quick way to start showing positive history on your credit report after bankruptcy. 2. Mix different types of credit wisely. Credit scores improve when you have a mix of revolving and installment accounts in good standing. Revolving accounts include credit cards, while installment accounts include loans with set payments. After bankruptcy, start small with one revolving account and possibly a small installment account. Make sure you can manage both types without missing payments or creating high credit utilization. Having a mix shows lenders you can handle different credit responsibilities at the same time. Do not rush to add multiple accounts until you are confident in managing your current ones well. 1. Be patient and stay consistent. Rebuilding credit after bankruptcy takes time, and there are no quick fixes for this process at all. Consistent good habits will slowly erase the negative impact of bankruptcy from your credit record. Avoid falling into old financial habits that could harm your recovery and create new debt problems. Focus on steady progress and small wins like on-time payments and reduced credit utilization now. Celebrate milestones such as reaching a higher score range or qualifying for better loan terms soon. With persistence, you can rebuild your credit and create a stronger financial future after bankruptcy. Rebuilding credit after bankruptcy takes time, patience, and the right strategies. Which step will you start with today? Share your plan in the comments. And if this video helped you feel more confident about your financial future, don't forget to like and subscribe for more guides, tips, and success stories to help you on your journey. More empowering content is coming soon.